Today, Bitcoin notches yet another fresh record high. FTX's former technology chief, Gary Wang, avoids prison time. And Andrew O'Neill of S&P Global Ratings lays out what could happen if the Fed starts buying Bitcoin under Trump. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto markets are mixed this morning. As of noon Eastern, Bitcoin rose more than 1.5% to $94,179 after trading at yet another record high just shy of $95,000. Meanwhile, Ether lost 2/3% and Ripple's XRP gained more than 1/3%. Okay, let's talk about the top stories. Gary Wang, the ex-technology chief at FTX and the fifth executive of the collapsed exchange to face sentencing, will avoid having to go to prison. On Wednesday, a federal judge sentenced Wang to time served and 3 years supervised release for wire fraud and conspiracy to commit wire fraud, conspiracy to commit commodities fraud, and conspiracy to commit securities fraud. Now, Wang originally faced a possible maximum sentence of 50 years in prison for those charges, but he took the stand against his former boss, Sam Bankman-Fried. Now, with his sentencing today, Wang is the fifth and final FTX exec to face punishment. Nishad Singh, the former head of engineering, also escaped prison time, while Caroline Ellison was sentenced to 2 years, Ryan Salem was sentenced to 7.5 years, and SBF was sentenced to 25 years behind bars. Next, President-elect Trump is reportedly considering crypto lawyer Teresa Guillen to head up the SEC. Now, according to CoinDesk, Guillen is among the candidates set to become the next SEC chair when Trump takes office in January. Guillen currently leads the blockchain team at Baker Hostetler and has represented companies and executives in lawsuits brought by the SEC. Trump promised on the campaign trail to fire SEC Chair Gary Gensler, which he can't exactly do, but he can pick someone else to lead the agency. The industry is hoping that the next SEC chair will take a friendlier stance on crypto enforcement. And finally, some news coming from the Trump transition team just this afternoon. Bloomberg reports that they're weighing a crypto policy-focused position in the upcoming White House. The report said that the team was vetting candidates to serve in such a role after Trump has staged his embrace of the industry. Now, we reached out to the transition team about this report from Bloomberg, but haven't heard back yet. All right, for our main story, we're still looking ahead to what a Trump White House and Republican Congress will mean for the industry. Crypto World's Tanea McKeel spoke with Andrew O'Neill, digital assets managing director at S&P Global Ratings, about what regulations could take a priority in 2025 and what impact some of Republicans' biggest promises, like a strategic Bitcoin reserve, will mean for price.
Well, thank you so much for joining us, Andrew. How much is regulation in the U.S. really a catalyst for crypto in 2025? I mean, crypto is a global product. So much of price performance has been tied to macro news lately. So is regulation specifically in the U.S. the focus next year?
Yeah, so first, thank you for having me. I think we're expecting some developments early in 2025 under the new administration. There have been regulatory efforts so far in the US that have somewhat stalled due to a level of partisanship in those discussions that perhaps hasn't been present in other markets. And what we've seen particularly in terms of use cases of blockchain technology in financial markets, one of the factors that's really holding back adoption is the ability to use on-chain cash. So to have something to solve for the cash leg of financial securities on-chain. And in the EU, we've seen now the emergence of a regulatory framework for stablecoins. We've seen that in various Asian countries as well. We've seen more interesting developments in terms of digital bonds, in terms of money market funds, but for those use cases to actually scale, the fact that the US market has not really been part of those discussions so far is clearly an inhibitor. So if we see the emergence of a robust regulatory framework in the US next year, that should give institutional regulated investors confidence in engaging with products that use stablecoins, and indeed that could accelerate some of the more well-tested use cases that are out there.
Well, one argument for crypto getting a boost from regulation is because companies will feel more confident about getting into crypto. What kind of adoption would you say people should look for if we get, say, a stablecoin bill or market structure framework? Where are the most likely areas for growth?
I think the market structure framework probably on a longer term horizon. That would bring a bit more predictability,
Like
perhaps
beyond 2025?
certainly beyond the start of 2025. But we'd probably look at stablecoins and custody being the first ports of call. The shift in regulatory focus from a mainly kind of enforcement-driven approach to more of a rulemaking approach should provide a bit more visibility to crypto businesses and how they go about their activities. So, for example, we've seen various exchanges cease their staking activity in the U.S. as part of settlements with the SEC. We've seen others continue to make their case in court to continue to provide that service. Having some clarity around staking will be helpful to them. Should also then enable staking to come into the Ether ETFs. So Ether ETFs as of today don't stake the underlying ETH. That means that the investors do not have access to ETH staking yields. And we have indeed seen other jurisdictions allow staking within Ether-based exchange-traded products. So, but however, that links back to the custody question, because one of the concerns that we've had looking at the emergence of Ether ETFs in particular is that if that underlying Ether were to be staked, then there's a risk of concentration growing among the custodians that would be staking that Ether. That could have risks to the operation of the Ethereum network through increased validator concentration, and that's where the repeal of SAB 121 could be helpful. That's another factor that we expect to happen early in the new year that will allow more entities in the US market, more banks in particular, to start providing crypto custody services. That's generally been one of the early gateway activities that institutions have entered into this space through in other markets. But so far, SAB 121 has prevented them from doing that in the US. And we've seen very high concentration as a result among the custodians to those ETFs.
Well, let's talk about some of the bigger promises from Trump and Republicans come 2025. The strategic reserve being one of them. How likely is that we'll see a reserve, the Fed actually going out and buying Bitcoin rather than the stockpile of what the U.S. is already holding, what it's already seized? How would that affect the price of Bitcoin over the long term in your view? Sure.
So in terms of how likely it is, I think it's still very early. When we look at, a lot of promises get made during a campaign, whether that translates into actual action is to be seen. Clearly, there is a proposal on the table from Senator Lummis. That proposal would, if it were to pass, and we're not taking a view at this stage as to where that's likely, but certainly less likely, we would say, than stablecoin and custody developments. But if that were to pass, that would bring the Federal Reserve to purchase 200,000 Bitcoin every year for 5 years. That's actually more than the amount of Bitcoin that's newly issued each year. So clearly that has implications in terms of supply-demand dynamics for Bitcoin, clearly supportive of price. To some degree, there may be a anticipation of that built into the increase in price we've seen in recent weeks, but clearly, that would be a factor that would be supportive of price. It would undoubtedly lead other nations to follow suit. It would also have an influence, perhaps, on corporations managing their treasury, their investments. So, but what's perhaps interesting, considering that this is at this stage still a relatively uncertain development, what's very, very interesting to us is actually the shift in narrative towards the asset. So this idea of Bitcoin as a hedge against currency debasement is something that started out within the narrow universe of the crypto community, has started to broaden to more institutional investors, particularly this year with the launch of ETFs in the US. And now we're seeing that argument made in policy circles. So when we think about debt sustainability for governments more broadly and globally, that is a question that many governments have to deal with in coming years and decades. And the fact that Bitcoin is now part of that conversation is in itself an interesting development.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.